Hey guys, welcome back to the channel. Today is October the 9th, and I wanted to talk to you about win rate. So many people ask, what is the win rate? What should I be, trading? What should I be looking for as far as margin in a sense? What should my rate look like win the losses? Okay. It depends. It depends on the person. It depends on if you're looking for great setups. It depends on if you're taking high probability setups. It depends on a lot of different factors. It depends, if you know how to trade correctly and what you're actually looking for. Meaning you understand market structure, like I always say, and price action. Because to me, those are the two most important core elements of trading. If you can understand those two things, then, like I said, you will be on your way to conquering some means of success. Okay, so win rate, I want to talk to you about, and I'll show you a strategy that you can actually use, which has provided me in most of my trading sessions, almost all, 100% win rate in a sense. There's traders who are a part of this community as well, who have been watching the videos and kind of picking up on, how I actually trade and incorporate it into their own trading. And if you don't believe me, you can join our Discord community. You can ask those individuals. You can drop comments in the Discord and just ask, because each and every day, pretty much, there is a Discord community tied to this channel here, which I'll show you here in a little bit. We come together as traders and we talk about the markets, the future markets. Most of us specifically trade either the ES, the MES, but the other individuals on the Discord who trade other markets as well. So we invite you in. It's free of charge. But like I was saying, here in the Discord community, if you join, basically, traders come together. We talk about, tips, hints, zones, and levels. It's kind of a question and answer type form. Everything pertaining to the future market. So I'll show you that Discord community in a second. And like I said, it's free of charge. You can join it. Just find the link down in the description portion of the video. But what I'm trying to get at is that we have lots of traders or traders who are understanding and picking up the strategies I actually use and have turned their trading around. Some of them with a 100% win rates in their trading. Whether they're trading the MES, the E-mini S&P 500, the NASDAQ, whatever it is that you actually trade. This strategy of how I trade actually works. Doesn't matter what market, okay? It could be Forex. It could be stocks, options. It does not matter, simply because the fact is that it's all centered around supply and demand, okay? If you don't know about supply and demand, please try to learn supply and demand. You can watch the videos here on the channel. I have tons of videos packed with excellent content surrounding various topics, primarily around my trades, how I trade. You can watch the live recorded sessions here on the on the channel as well. So just go back and watch some of the videos. If you want to try to fine tune and find certain videos about supply and demand on my channel, just go to the home page, click on that little magnifying glass, type in supply and demand, and it will pull up a few videos that I have on supply and demand, as well as various topics here on the channel. So join the Discord if you're interested in doing. All you have to do is find the link down in the description portion of the video below, and I will show you that. Okay, so let's talk about it, because I want to run you through a couple of setups of how you can actually maintain and kind of conquer and even strive for that 100% win rate trading the future markets using this simple supply and demand strategy. So let's get into it. I'm going to show you an example from Friday. And the thing about how I trade, everyone knows who watches the channel, I trade based using paired charts primarily, okay? I like to look at a higher time frame, which I recommend you do, because a higher time frame is going to put you in the direction. It's going to help you from a bias of which direction you need to be trading. So from the higher time frame, if the market is, making structure to the downside and breaking through areas of structure to the downside, then you primarily want to be looking for pullbacks to go short, right? And vice versa if the market is moving up, okay, and breaking structure or making structure to the upside. So kind of follow in that same direction and then scale down to a lower time frame chart and trade, off your anchor or your lower time frame chart, but be mindful and stay in the direction of the higher time frame chart, okay? But I also can trade primarily off of one chart. I don't like to get too low of a time frame, meaning trade off of too low of a time frame, because you can kind of get chopped out of the market sometimes. But if you're quick and you know what you're doing, which for me, I can trade directly with the 4 range or the 12 range, or sometimes I'll pair the two together, like my 12 range chart and my 4 range chart. For you, it could simply be a it could be a 5-minute chart, maybe a 1-minute chart, or maybe you're trading from your 60-minute chart and a 5-minute chart. However you trade, but I think it's best to pair charts together, okay? But anyways, I'm going to show you 2 instances here, a couple examples where you could take a trade straight from a 12 range chart, specifically looking for an area of demand setup, as well as how you could have paired it using the 12 range and the 4 range chart. Okay, so and looking at the first example, it happened around 1 o'clock on Friday. Okay, all right, so price is moving and making lower lows and lower highs. We'll blow this up here on the 12 range chart first. So it's making lower lows and lower highs to the downside. Okay, so which means that basically price is selling off. All right, and it's making structure to the downside with making swings. We see these lower highs, lows, lower highs, and then lower lows. Okay, but it approaches some area of support out here to the left hand side of the chart. But what you're looking for is once you start seeing rejection. Rejection can come in a couple of different forms. Rejection can come in the form of price making a W once it hits an area of support, and then it breaks structure back to the upside, or simply just a break of structure back to the upside. Now you may be asking, what's a break of structure? Break of structure is just simply price breaking through a prior area of resistance. So price made a low here, pull back, made a lower high, lower low, broke the resistance up here at the tops, broke structure. Okay, all right. So it started moving up, making a high here, a lower high, and then broke structure right here, breaking resistance, push it up. And at that point, all we want to do is simply mark an area of demand, okay? Because this is an area of demand because there is aggressive buying, green candle, green candle, green candle, green candle. You guys hear me talk about that in lots of my videos. But that's aggressive, I guess I say intermediate or a small area of aggressive buying, okay? In an area where price made an area of demand because it broke structure to the upside. So price breaks structure to the upside, market area demand right here as I did with my box. Price pulls back to it. Now, you can trade it straight off of the 12 range chart. This is the actual setup. This is the strategy, which is very simple of how I trade. But again, it's all centered around supply and demand, and that's the only thing I trade for. I trade in my own trading throughout the sessions, Monday through Friday, is look for supply and demand setups, okay? Because they are highly profitable, okay? Because you have to understand one thing is that the powers that be, the bigger players in the market, are trading in zones like this. They're leaving a footprint behind that you can trade from, okay? So you have to be able to detect it and locate those areas. Price pulls back. If I'm trading straight off my 12 range chart, all I'm doing, okay, is looking, again, marking that area of demand, price pulls back to it, and now all I'm looking for is a candle break back to the upside. Okay, this candle here, this green candle, did not break this red candle. I need to see at this point here, a bullish candle, pretty much breaking the candle to the upside, breaking this red candle here, a bullish candle, green candle, closing above or starting to break above this red candle to the upside. The moment I get that, which is this candle right here, I'm taking my trade long, going back up. Okay, so if you got in here, say 62, you take the trade back up to the tops here and get out at 65, 65 and a half, pick yourself up 2.5, 3 points right there. Yes, I'm a scalper. I don't look for, I'm not looking for to get into a trade and hold it out for 30 minutes to an hour. Case is, I can take my, my ticks, which add up to be points, whatever the case is, take my profit, move on for the next setup. Why? Because when you scalp the way I do using supply and demand, there are tons of setups that you can actually trade each and every day that, versus somebody who sits into a trade for an hour or two, or whatever the case is, and the market's just pushing up, pulling back, doing this ebb and flow thing. Eventually, that kind of scares traders out of the market, unless you really have the capital to sustain the actual swings that the market's going to kick off. Staying into a trade off of a higher time frame chart. So let's say you're trading off a 1 hour chart or even a 4 hour chart, something like that. Guys, that's swing trading, position trading, and you're going to have to sit into a trade for a while, and it may shake and bake you out of the market because the market, when looking at trading off of higher time frames, whatever the case is, it swings, pulls back. It's got big swings. So, that's your style of trading, then salutes to you. It's not for me. It's not my cup of tea, and I like to trade, looking for shorter areas or smaller areas so I can scalp, make my points or ticks, get out, look for the next setup, okay? I'd rather take my 2 or 3 point moves, which could be, 12 to 16 tick moves, look for the next setup, get another, 16 ticks, 20 ticks, whatever the case is, and then just stack it up that way. By the end of the session, have a nice accumulated amount of ticks for the day, okay? So, yes, that's how you get to the trade off the 12 range chart. Now, if we're looking to take this trade off the 4 range chart, let's see if we could have got into it maybe a little bit earlier than at 62. That same area I just showed you is this area right here, okay? Let's go back to it on 12 range. right here at 105, somewhere in this area right here, okay? Now, if I'm trading off the 4 range chart, what I'm primarily looking for, once I mark this area of demand off of the 12 range chart, pairing two charts together, meaning the 12 and the 4, okay? So this area right here, like this, as I just mentioned, is the same area right here. And basically what I want to see, what price break structure, say for instance, it makes this area of demand right here on the 12 range chart. Basically what I'm waiting for price to do is pull back to this zone here at 58 like it is right here, or 57.5, all right, like it does right here. And then what I'm looking for price to do if I'm trading off of a lower time frame chart, being that I'm trading or pairing my charts on 12 and 4, I'm looking for a structure break on the lower time frame chart. Now here we don't really get a structure break on the actual lower time frame, meaning I would like to see price break an area of structure, meaning a prior area of resistance. Maybe there was a little swing right here, then price pushed up, broke it, pulled back, okay, creating a little small area of demand on here on the 4 range chart, but I didn't get that, okay. So what you can do at this point here is that once price pulls back, if you're pairing the two charts together and price comes back to this area of demand here, which would be this same area right here on the 4 range chart, okay. What I'm looking for now, I'm looking at price action and see what happened when price pulled back, okay. Now I see that price broke through these little what I call micro swing areas right here, and what I'm looking for price to do now is to break higher, okay, because what it did was it made a swing here, pulled back, broke lower, taking out these areas here. I need to see price at this point here actually break above this area right here at 60, okay, close above 60 in a sense, for me to be interested in going long at this point, okay. Now we did mention that we could actually go long here around 62 on the 12 range to give us a few, a few points there and going long. But on the 4 range, a little bit trickier if you're looking at trying to trade on this setup here, because there's really no structure break here. But price did break structure to the downside as it was moving and making lower lows and lower highs come back down. On the pullback, it broke these little areas, these little micro swing areas here. Again, I want to see price break above the 60 area here if I'm interested in going long. So it taps into this area of demand sitting right here, okay, which is this area right here at the 12 range chart. Once it does that, okay, let's see here. Give me 1 second. Okay, so it breaks higher here, it pulls back, okay, then it breaks higher and it pulls back, all right? Okay, so the moment it breaks higher here, I'm not long quite yet. I need to see some further means of rejection. Price pulls back, red candle. When I get a close of the a green candle back to the upside pretty much, I'm going long, okay? Now it does pull back right here. As long as it doesn't really break, you can put your stop loss below here a few ticks. I wouldn't put it tick to tick, because if you put your stop loss right here at the bottom end of this, you're probably gonna get stopped out. Give it a few ticks stop, anywhere between, for me, it could be 4 ticks, 6, 8 ticks, somewhere in that range there, maybe even 10 ticks when we're trading off of the 4 range chart, okay? And possibility, you may want to also position your stop, could be right here at the end of this low here, right at the end of support right here. But typically I like to put mine wherever I enter that, put it at the back end of that candle. But there's a little swing when price pushed it upside right here. So this little supporting swing, you can put your stop right below here. Again, don't put it tick to tick. Give yourself a few ticks room, whether it's 4, 5, 6 ticks, whatever the case is, maybe 8 ticks. Give it some room to breathe, okay? Because the market makers, they know where your stops are at, okay, in a sense, and they'll try to test that area to get your money and get you stopped out, and then move the market right in your direction. So once price breaks 60, pretty much pull back, rejects to push any lower, break, I see a green candle close to the upside, I'm long, and I'm interested in taking a long, at least back up to this next area right here. This liquidity sitting up right here at this top of the swing right here, and back up to the highs right here, okay? So actually at the 4 range, if you're taking it probably this way, let's see, taking it this way, getting in at the close of maybe 66.5, somewhere around there, you could have taken the long and probably picked up an extra point, maybe 1.5, trading and pairing the two charts together, because the 4 range will help you get into the trade quicker, or I'm not gonna say quicker, but it'll help you get into the trade sooner. Okay, I should say that way, sooner, because you can see all the little micro swings, the 12 range, the bigger candles, it's a higher time frame, so you may not be able to pinpoint, and that's why I like using the 4 range, because it helps me get to a trade and be more precise with my entry from time to time. I would trade from the 4 range when I'm pairing these two charts together. Sometimes you're seeing me trade from the 12 range as well, but it just depends on how the market's moving and the setups that I'm seeing. Sometimes my eyes may be zoned in or zoomed in just on the 12 range, and I see demand or supply on the 12 range, and I take it straight from the 12 range. And then, but if I need better means of confirmation and trying to get into the trade and be at a more precise entry, I'll come over to the 4 range. So again, price pulls back. We're back in this area of demand right here. This will be in the area, the same area here. Same area right here is this area here on the 4 range. Price pulls back. I see, where price broke structure to the downside, meaning breaking these little micro swing lows. These little micro swings right here. And I need price to break above 60 for me to be interested and go long. It does. I don't take it right there immediately. Wait for the pullback to see if price is going to reject it. I want to push lower. If it doesn't, I get a green candle close to the upside. I'm going long, okay? I'm going long back up to the most recent highs right here in this area here, and back up to this area here. Let's see, right here, back up to this high right here. Same high here, around 64, 65 is the same area right here, okay? Now, if you really can pay attention and really understand price action, I just showed you how you could get in with the 12 and the 4. But if you really can look at the 4 range chart, okay, and maybe someone that trades straight out the 4 range chart or could trade straight out the 4 range chart, I can do it. And, but you just have to really be quick about doing so because the 4 range does move pretty quick when it gets to an areas of setups, if you see setups, whatever the case is, okay? So the same kind of setup happened here too. If you trade straight off the 4 range, just like I showed you how you can trade off of the 12 range directly, you can trade off the 4 range directly. I don't highly recommend it because you come out better when it comes to pairing charts together because you kind of want to use a higher time frame to make sure that you're in the right direction or moving with a higher time frame in a sense. Just like right here, we saw a structure break to the upside, breaking resistance right here, pull back, got an aggressive area of buying right here. Then that tells me, okay, if I scale down to a lower time frame, look for a setup, I can get in and be in a move back to the upside for a short trade, okay? But here's an opportunity to price, makes a low here, makes a lower high, a lower high, lower low right here. And then it breaks this structure right here. Same structure right here on the 12 range. I'm just showing you how you can do it off the 4 range. Breaks higher, okay? Price pulls back to this area here, all right? And just as I showed you before here, even though price pulls back, so if you're marking your zone directly off the 4 range chart, then you're going to either want to mark, let's see, this area right here as your area of demand off of the 4 range chart. We're not talking about the 12 range now. We're looking to see if we can trade straight off of the 4 range chart, okay? So that's our demand zone. There's also another area of demand sitting right here, which we'll draw as well, right here, okay? Now we see what happened here. Price pulls back on the way back down. What does it do? It does break structure here, these little micro swings, okay, to the downside. But one thing we also see too is what? It taps to this area of demand, okay? Now we can't just hop right into the trade until it gets there because, again, we've got to see some means of rejection, okay, to be able to take the trade. And what we see on the way to the downside, as price was moving lower, we have price made a low here, pull back just to make a lower low. So it made a swing, but it broke areas of structure, what I call these little micro swings. And now we have to see price clear those areas going back to the upside, meaning breaking back through areas of resistance, okay, on the way back to the upside. All right, so that's how I mentioned it. Once it breaks 60, okay, pulls back, as long as it doesn't break back below and take this low out, and we get some rejection back to the price push back, look like it's going to reject and go higher, I'm going long, okay? All right, so green candle closes back to the upside. You can go long. It does kind of spook you out, scare you on the pullback here, but that's the part of trading that you have to know, either to set your stop loss and know that, okay, price comes back and breaks, closing with the candle below this area here by several ticks, whatever the case is, meaning a candle break to the downside, closure below this area. But I probably put my stop loss right here, this low right here, being that it's the lower time frame chart. It kind of gives us a little bit more room, okay? So we put your stop loss here, price never comes back there, and it keeps pushing higher, like I said, and it wants to test this area. What happened right here when price pulled back right here, if we got in, say the close of this candle right here, what happens is price, like I said, market makers, they know where your entries are at, or your stops. Well, people are going to probably put their stops at, and that's right below the support and swing right here, tick to tick. So give yourself a few ticks breathing room. Like I said, 4, 5, 6, maybe 8 ticks right here. It puts you down here, somewhere in this area right here, putting the stop loss. If you do that, price never touches it. It keeps going up. So again, you take your trade off the 4 range chart, wait for the structure break, price to pull back, look for the rejection, then go long. Same thing we did here on the 12 range chart. It's that easy, okay? And in this case, we have 2 areas of demand. Demand down here, demand right here. Wait for price to pull back to the either area, get the rejection, go long. Okay, so now let's take a look at an area of supply. Okay, we just discovered or looked at an area, identified an area of demand off looking at the 12 and the 4 range chart. We're going to look at the area of supply off the 12 and look at it and pair it with the 4 range chart. Okay, so again, this was around 11:30 on Friday, this past Friday. Okay, trading session, and what we have here is an area of supply sitting right here. Okay, price pushed down here, made a low, pull back, lower low, breaks back higher, and then eventually pushes lower, so creating an area of demand. Supply sitting up in that area there. All right, and there's 2 ways you can trade it. Basically waiting for it to pull back to the area of supply here on the 12 range chart, or you can switch over it again, pair it with your 4 range chart, a lower time frame chart, to maybe get into give you more confirmation to get into the trade. Okay, but here is an area again, supply. Okay, so price pushes lower, pulls back the moment it taps into it. Okay, and I'm looking for a break of a candle to the downside, meaning it made a high right here. I'm looking for a red candle to break the body or start to close below the body of this green candle. So when I see this red candle right here do that, I'm taking that trade, back down at least to the lows right here. Okay, all right, the most recent low where there's liquidity resting at. This is support sitting right here, and price continues pushing lower. So if you're in with multiple contracts, then you can actually scale behind or trail behind your behind price pretty much. You can take your first contract out here and then just kind of trail behind price and moving if you got a stop loss, whatever the case is, you stop below as price is pushing lower. Okay, so that's trading straight off of the 12 range chart. If you get in at 76 3/4, take it back down here to 72 3/4 or 72 1/2, pick you up some profit there. If you trade it, again, I'm going to go ahead and show you. I will. Let's see, we'll add it to all charts, apply, okay. Let's see here. All right, for some reason it's not drawing the box for me, but that's fine. It's in this area right here. We'll draw it here on the 4 range chart here. Let's see, right here. Okay, let me move this a little bit. Okay, so it's at the bottom of N079. 79. Okay, there we go. Top end there. Okay, top end at 84. Okay, 84. So that's the box there. And all we're doing is looking for price to. We saw it tap back into it on the 12 range chart, but it also tapped back here on the 4 range chart. All right. Now on the 4 range chart, all I'm looking for is pretty much a structure break and a pullback to enter long. Enter short, not long. Excuse me. We're looking at supply. So price taps back into it. If you wait patiently, looking for the entry off the 4 range chart. Pulls back right here, taps into the zone. Okay, when it pulls back. Okay, and I'm just looking for a structure break back to the downside. All right, so let me let's see, 79 1/4, pretty much 79. Okay, so price taps back into it, and I'm looking for pretty much just this basic structure break. We see price makes a high here, pulls back, breaks higher. Okay. And if you entered on the high right here, okay, on the structure break, so what I'm looking for is price made a high right here. If you can see this, made a high here, pull back, made a higher high, a little swing right to the upside. The moment I get the candle to the downside of break structure right here, what you're really looking for is price to pull back. So it'll look something like this right here. See, price made this high here, pulls back, and then breaks up, makes a higher high, right? So now I'm just looking for price to push back down, break structure right here, and then primarily just looking for a pullback. We didn't get the pullback. Price just kept thrusting to the downside. So the moment that I saw, if you see price, let's take this off, breaking below structure right here on the 4 range, once we tap into that 12 range demand, okay, so it's taking out structure here. Again, we're looking for pullback, and then once price pulls back, rejects, go long, excuse me, go short. But we didn't get that. Price just kept pushing hard to the downside. So the moment you see price break below structure and then doesn't want to pull back, pretty much it just keeps continue pushing lower. Say for instance, and you can take a chance, take a shot, continue going in or short, and again looking to trade back down here to the lower portion of this area of support right here. Okay, and price continues pushing lower. So again, price didn't give us that little pullback right there, which we normally look for. Blow this up so you can see it. So taps to the zone, breaks lower, breaks below this little area structure right here. You can take a short entry or shot right there. And also, if you take a look at the 12 range, you can see it did start to break structure here to the downside. Not break structure, broke this candle to the downside right here. You can go short, all right? And just kind of, like I said, if you're in multiple contracts, just scale behind or trail behind price. Taking your first contract or two off at a certain TP or target profit area, and let the last contract or two trail behind price. That way you can capitalize on the full move if you can try to catch it. Sometimes price will just move. In this case here, it just moved less to the downside. But this is a setup or an example of trading, two pair of charts. Either you trade it directly off the 12 range chart or trade it, using the two charts paired together, 12 and the 4 range. In this case here, marking your supply zone off the 12, waiting for the pullback on the 4, waiting for the structure break on the 4, pull back, and then go short. Okay, but again, like I said, we didn't get that full pullback like we should have gotten, and then or maybe it would have gotten. Normally, what price does, it'll break structure, then pull back, and then we get the rejection, go short. Price just kept bursting to the downside here. But again, you could have entered and went short there. But that's pretty much it. Just want to show you guys, the strategy that I use each day. But I wanted to talk to you about how you can pair it together with two charts, your 12 and the 4 range, as well as just trading maybe specifically off of one chart. The 12 range, trading specifically off the 4 range, it's a little risky. I don't recommend doing it unless you really have experience and know how to trade it. But if you're trading directly off the 4 range, off supply and demand, you must understand that the setups are going to be very short-lived, and it's not going to kick off. I'm not gonna say it's not gonna kick off a lot of ticks or points, whatever the case is. It's just the fact is that you got to know that the moves are probably going to be smaller. When you get into a trade is probably going to be smaller as far as the area in which you can profit from, whatever the case is. But where you get like lots of setups, yes, the lower time frame, the more setups you're going to actually see. But you're going to have to know, like I always say, you need to know before you get into a trade where to get out and where to take profit at before you even enter that trade, so you have an idea. Okay, I need to take my trade here, get out here. All right, just to safe net you or safeguard you. Okay, but getting into showing you the Discord, I'll show you guys that right quick. So if you're interested in joining the Discord, come in and join us each and every day during the sessions as we talk about the future markets. We share our strategy. We share our levels and zones of interest. With trade entries, share trade entries. And then we have another channel which will be the general chat. If you're interested in sharing, maybe you have a strategy that works for you and you want to share it with other individuals. You can also there's a general chat section or channel to where you can talk about certain things outside of the actual session, meaning activities within the actual session. Starting tomorrow, there will be a channel set up. It'll be hashtag trading floor, and that's going to be the channel where all traders can come into, join each day during the session, where we're talking about the actual markets and engaging in the actual markets and looking at the session at hand, taking part in the activity, talking about our levels and zones, and just discussing the market in general. Anything else outside of that, please, you must discuss that into the general chat section, where you can share information with fellow traders as well in the general chat channel. Okay, hashtag general chat. Okay, so outside of that, I'll show you that right now. Okay, this is our Discord community. We have well over 400 members now, or community members now, or traders that have joined. Again, like I said, it's just a community where we have fellow like-minded traders that come together and share information collectively and take part or engage into the active trading session Monday through Fridays. So great community. A lot of people are learning from one another and sharing information as well. So if you're interested in joining the community, find the link down in the description portion of the video below. And that's pretty much all I have. Or unless you guys are interested in maybe the YouTube membership program or the tier program, if you go to the YouTube channel page right here on YouTube, my channel page. If you click on or see a button that says join, click on that. There are 2 tiers set up to where you get, you know, different perks or rewards. It's all for like a very inexpensive nominal fee, whatever the case is, like a price of a cup of coffee. You know, it's $4.99, $6.99. Most everybody signed up for the Elite Channel membership, and the reason being because they love the exclusive video content that they're getting weekly with the trade breakdowns. It's where I go through and walk through traders through my actual trades, discuss in detail or in depth about my trade entries. You know, why I took the trade, where I took the trade from, what I was thinking behind each trade, the thought process. So it's helped a lot of individuals out because they are clearly understand and starting to maybe incorporate the strategy into their own trading and picking up on how I trade and figuring things out just by watching the trade breakdown video. So if something you're interested in, you can click on the join button on any video on the channel, or the join button on the homepage of the channel as well. So, but outside of that, you know, just find the link to this Discord if you're interested in joining the Discord down in the description portion of the video, as well as there's a link for the YouTube tier membership program, or where you can join one of the tiers. There's a link to that down in the description portion of the video as well. That's all I have for you guys in this video today. I appreciate everyone who's tuned in, watching the video. Please make sure to drop a like on the video by smacking that thumbs up button. If you're not a subscriber, please take the time to go ahead and subscribe to the channel. Find the subscribe button down, that little red button that says subscribe. Click on the bell. Make sure you got your post notifications turned on so that you never miss one of the videos here on the channel. And I will see you guys in the next video. Take care.